Hi everyone, good morning. This is Abid Khan and you are watching Karachians Academy YouTube channel. So this is our series of lectures and we are doing CIEAS level accounting 9706 past papers. So now we have selected current year 2022 and its attempt February. Paper 9706, MCQ based question, paper 1 and variant 2. Till our last lecture we have finished 1 to 20 questions. So you can see them, all the lectures are available on the playlist. Okay, so see our playlist and you can see 1 to 20 questions on our YouTube channel. So today we will be doing question number 21 and onward. So let's move on to question 21. Yesterday we did question 20. Today we will be doing question 21. So this is question 21. Very carefully read the question. The following information for a limited company at 31st December. Always mark the important points. This is closing information. Closing year is 2021. December 31st is the closing information. Ordinary share capital, retained earning and 8% debentures. Right? So this is the closing information. Okay, so retained earning at 1st January 2021 were 82,000. This is opening of retained earning. An interim dividend of 45,000 was paid, okay, on 1st May 2021. Okay, interim dividend was paid during the year. So this will come in your, as I yesterday explained. So this will come in your financial statement, that is changes in equity, statement of changes in equity. This will appear there. What was the return on capital employed? Very carefully, capital employed, return on capital employed at for the year 31st December. Okay, so let's proceed with the question. First of all, what is capital employed? Capital employed is basically your equity plus loan, yeah, or you can say long-term liability. This part is your equity and this is your long-term liability. Total will be okay, its total will be 300 and 450, 510, 300, 400, 410 and 510, 510,000. 510,000 will be capital employed. Capital employed. If you want to return on capital employed, what will be its formula? Return on capital employed will be profit and before interest divided by capital employed into 100%. So capital employed we have here, but profit is not given, right? And always remember, not the profit after tax or income tax and interest which is available to shareholders. You will not be considering that. You have to take profit before interest. before deduction of interest, because your capital employed do have the long term liability, and long term liability would also, they will also want to know what is the return to them. So because interest is to be paid, so they will see how much profit is available to cover up their interest. So before interest profit you have to consider, right? So now we have to calculate profit. So always remember the way account we use in the subscription, same way we will be using here. So retained earning account you will make. Your opening, they have given you 1st January 2021 82,000. 82,000 is 1st January 21 balance BD. Okay, this is retained earning 110,000. 31st/12/21 balance CD. Okay, we have taken this. We have we have considered and we have taken these two items. An interim dividend of 45,000 was paid on 1st May 2021. Okay, when you pay the dividend, it is retained earning is debited and your bank gets credited. This is an entry to pay dividend payment. This is interim dividend. You can say retained earning will be debited with 45,000 because of bank date is 1st May, right? And this is interim dividend. How much it is? 45 and 110. This will be 155,000. 155,000, right? 155,000 minus 82,000. This balancing figure will be the profit that when you report a profit, when profit is transferred to the retained earning, the profit is your credit balance, then P&L account or income statement debited with whatever amount and retained earning is credited, right? So retained earning always comes, when comes in credit, it means it is a reported profit. Balancing figure will be your profit. Income statement, 155,000 minus 82,000. 73,000 will be your profit. Okay, so now we are very much clear. But this profit, 73,000 profit, this is profit after interest and taxes, right? So this is profit after interest and tax. How much? This is 73,000, right? So here interest has already been deducted when you calculated this net profit. So you add that interest, calculate interest. How much? This we have 8% debenture 100,000, right? So the 8%, if we calculate its 8%, this will be 8,000. So it means during the year you have paid or you have accrued this 8,000 of the dividend on debentures, sorry, interest on debenture that you have to pay and that you have accrued in this year 2021. So you have to add this back, 8,000. How much this will be? 81,000. Yeah, this is profit before interest, and your formula is same, profit before interest, which is 81,000 divided by capital employed 510,000 into 100 into 100. How much would be? 81,000 divided by 510,000 into 100. 15.88. Return on capital employed is 15.88. Your answer is D. Okay, this is clear. Then move on to question number 22. We done with 22. 21. Which statements about stepped costs are correct? Stepped cost, correct statement. Fixed within a range of activity. Yes, fixed cost is that which is fixed to a certain level of activity, and when you crosses that level, then you have to add more cost. That is fixed stepped cost. So this is quite right. Fix whatever the level of activity. No, fix it is fixed for a certain level of activity. So this is wrong. This option is wrong. Include fixed cost only. Yes, it is only the fixed cost. It does not include. So this option is correct. This option is correct. Include both fixed and variable cost. No, it does not have the variable cost. It only have the fixed cost. Means this option is also wrong. It means 1 and 3. So 1 and 3. Answer to 22 is A. Okay, move on to question number 23. Question 23, right? We are moving on to question 23. Okay. Okay, what is the question? Question 23. A production worker is paid 15 per hour. This is hourly rate for working 8 hours. Okay, normal working days. Overtime is paid at the rate of time, and fifth means basic pay plus 20, means you have to pay 120%, 1.2 or 1.2 or 1.2 or 120%. Both are same. A productivity bonus is also okay. Productivity bonus they are also offering $21 per unit. Remember very carefully, $21 per unit for each unit produced in excess of 12 units per day. Unit produced in excess. These 12 units is standard. Means 12 units they have to produce in 8 hours. At all costs they have to produce at 8 hours. So what benefit company is giving them? Number one, whatever the time they have worked over to the 8 hours, they will be paid overtime, and they are supposed to produce 12 units, and if they are producing access to the 12 units, whatever the units are there, they will be paid bonus on that. So two benefits company is giving them. So we can calculate, this is very simple question, so we can calculate it. So basics pay will be 15, basic pay will be $15, 8 hours. So we can check it how much it will be. 8 into 15, $120. Okay, weekly wages, basic wages, and then we will calculate overtime. Overtime, the 8 hours he has worked, this is 8 hours. Okay, these are the normal time, and how many hours he has worked. Friday, the production worker worked 12 hours, produce unit 14, and he was to produce 12. How many? 2. Okay, sorry, we will do it later. 12 hours. How many hours axis he has worked? 12 minus 4 hours. 4 hours. He has worked on Friday 12 hours. He was supposed to work on 8. 4 hours is the overtime. And how much overtime to pay? Normal rates are 15 per hour. How much to pay? 20% extra, means 1.2. We can check how much it is. 4 into 15 into 1.2, $72. $72 will be overtime, right? And then bonus. $14 units he has produced. He was to produce 12 units, means 2 units extra produce. Yeah, right? 2 units into per unit rate is given $21. Okay, then 42. Yeah, this will be 42. If we calculate how much it is, 72 plus 42 plus 120, total 234. Answer D. So question number 23, answer is D. Move on to question 24. What is question 24? A retailer made the following purchases of inventory in October. Okay, and these are the purchases on 5th, 12th and 23rd. Total units, the unit price, and this is total cost. Okay, there was no opening inventory. Very much clear for October. Business uses the first in first out. First in first out they are using. Okay, in October 200 units were sold. It means how much are total units? 50, 50, 100 and 250 are total purchase units. $250 are total purchases. $200 they have sold. Sale is 200 units. It means 50 units. Closing stock. Closing inventory 50. Okay. What question asked us? Okay, this 400 units were sold in 900. This is sale. What was the gross profit of for October? Okay, we have to calculate gross profit. This is very simple question. Comparatively, what I am seeing, February-March attempt of 2022. The questions given are very simple questions as compared to the previous years. Okay, gross profit we have to calculate, no issue. We know this is the cost of 128,000. This is purchasing cost, total is 250. If you divide this by, okay, no, this is not average, so we will not divide. Okay, we have to use FIFO method. Okay, we will be using the FIFO method, no issue. No, I think, oh, okay, I'm sorry. So we have to calculate, because this is your cost 128,750. It is cost of 250 units purchase. So what is unit price? 128,750 divided by 250, unit cost is 515. Okay, let's see what we have to do. If we want to, okay, if we want to work out closing inventory, see, we are using the again, I'm sorry, there will be no need of this. You can avoid it, right? Closing inventory, you are using the first in first out method, right? So 200 units are sold. So first from 200, first 50 units will be sold, then 50 units sold, means 100 unit will be sold. Okay, and then 100 unit will be sold from here. So the 50 units in hand under FIFO method, their prices will be 525. So 50 unit into 525 price equals 525 into 50, 26,250. It is value of closing stock. Now we have to calculate GP. So gross profit calculation. Sales, your sales is 200 units sold at 900, 200 units at 900. So how much? 1,80,000. I think 200, 900, 180,000 less cost of sales. Opening, you have nil, no opening. Purchases 128,750 less closing 26,250 okay, 128,750 minus 26,250, 102,500. This is cost of sales. Gross profit would be 180,000 minus 102, 77,500. This will be your gross profit, 77,500. Answer will be C. Move on to question number 25. Quickly. A company has two departments in its factory. The details are shown. Department machining, assembly. Okay. Budgeted fixed overheads for machining 1,80,000. If they work, it is budgeted hours. If they work 6 hours, 6,000 hours, total fixed cost will be 180,000. In assembly, if they work 10,000 hours, their fixed cost will be 90,000. So this is a budgeted data. And what is required? What is the fixed overhead absorption? Okay, you have to calculate fixed overhead absorption rate. Very simple. For machining department. Okay. So this is a very simple question. Simply what you have to do, simply machining department cost 180,000 divided by 6,000. So 180,000 divided by 6,000, $30 per hour. This will be your overhead absorption rate. Your answer will be C. Okay guys, we have done with the question 25th. I am releasing very short videos. So question 26 onward we will be doing in the next video. Hope you have enjoyed this lecture and this video. And if you enjoyed it, please like it and share it with other students, and subscribe our channel to get all the latest updates on the past papers. Thank you very much, and bye for now.